We were talking about the banks' negative performance last week, the large banks in particular really seeing a tumble. Some of them are coming back today, but still investors are watching Fed speak very closely. They're watching the yield curve, which has been flattening. And Mike Mayo has been watching all of this as well. He's Wells Fargo Senior Analyst. Our Brian Chung is back with us as well. So Mike, I know you're watching all of this stuff. How are you thinking about where the banks are positioned right now? It seems like sort of a delicate positioning in the eyes of investors.
Well, you have the Federal Reserve last week on monetary policy, and you have the Federal Reserve this week, Thursday night, you get the results of the annual Fed stress test. So we are wedged between two Fed very important moments. But last week, let's start with that, if that's okay with you, Julie.
Yeah, do it.
Okay. Well, last week, there were three key words in the Fed announcement. It was right up front in the 4-page release. And those three important words were inflation has risen. In fact, we've not heard inflation talked this much since really the 1970s. So I brought my 1970s bag for you here. And in my 1970s bag, I have leisure suits, I have mood rings, I even have a disco ball. But you know, the 70s, we don't want everything from the 70s. I don't think we want the pet rocks. I'm not sure if anybody remembers those. And we also don't want the bad inflation from the 1970s. And we also had bad inflation, not only 1974, but 1994. And that's when prices went up quickly. In 1994, the Fed was forced to raise rates very aggressively. You had unrealized and then realized securities losses, derivatives losses, mismatches between the bank's assets and liabilities. So too much change too quickly could be a very bad dose of inflation. But what I think I heard last week from the Fed is a good dose of inflation that's born out of recovery from the pandemic. And last year, the banks had the biggest decline in their net interest margin in a century. So to the extent that rates rise, we think that that can start to reverse for the banks. So you get the benefits from better yield curve. And so that's what the Fed said last week. And now Thursday night, what we expect after the Fed stress test is a green light for banks to return a lot more capital, both dividends and buybacks. And in fact, we think banks will be allowed to return twice as much capital this year as opposed to the prior year. And remember, banks acted as a source of strength during the pandemic. They suspended buybacks. That was one action they took. So extra capital became even more extra capital. So that should be a very good catalyst come Thursday night.
Mike, I can't tell if that's a leisure suit you're wearing. It's not blue, but I can't tell.
Well, I might be wearing, maybe bell-bottom pants for the, they were in then too. So, you always have
keep the mystery alive. But I will note this: you have buy ratings or overweight ratings on Bank of America, Citigroup, JP Morgan, and Goldman Sachs. Which bank stock do you really, really like out of those four to just play based on what you're saying in terms of inflation in the Fed?
Well, we got more aggressive through the downturn last year, and we remain aggressive and positive on the banks. But, our top pick has been and remains Bank of America. We think there's both a cyclical and a structural story. Again, with the Fed announcement last week, if rates actually are going to go higher, when I say rates, the federal funds rate, if there's a greater chance that will increase sooner than expected, Bank of America benefits 3 times more than the average bank, $1.8 trillion of deposits. And these are sticky deposits. I mean, the average life of a relationship in retail banking at any large bank is 14 years. And people underestimate the benefits of a multi-distribution, multi-product, multi-geography business model like Bank of America. So these customers, they could have customers for life now, whereas when I started in this business, 3 decades ago, that was anywhere from the case. So Bank of America cyclically benefits, and structurally, not only do you have this kind of lifetime value of customers, but they are one of the best fintech companies on the planet. And their digital banking, it's not just about digital relationships. We all measure that. It's the degree of penetration with each digital relationship. So it's whether it's online bill pay or deposit capture or depositing a check, I mean, they have metrics that are like, 10 or a dozen different metrics. And they're going deeper and deeper. So Bank of America is our number one pick.
Mike, it's Brian Chung here. Now, the story for the banks, at least in the last few quarters, was that with the curve essentially flat with the rates on the short end back to near zero, you really got to rely on your trading desks. So fixed income and equities trading was the real cash cow for a lot of these banks that have big money center trading desks. So that story, though, might be going away with volatility kind of disappearing from the market, although who knows if that's going to be the case over the next few weeks. But fixed income trading, we're already seeing it fall at Citigroup, for example, as of the first quarter. What do you expect to see in the second quarter, and how might that hurt the bottom line?
Well, Brian, don't leave the play here. Broadway, I think, is opening in the fall, last I heard. And this is a 3-act play for the banks. And Act 1 was about the strong capital markets, especially fixed income corporations, front loaded many of their financing needs, and that helped Wall Street. But the second act involves, benefits from loan growth, which is not here yet. It might not be here for 2 more quarters, but that's certainly coming. And Act 2, the capital return coming Thursday night, dividends and buybacks. So you have dividends, buybacks, loan growth in Act 2. And then Act 3, if you want to stay for the whole show, is that the industry is driving toward the best efficiency in history. Post-pandemic tech-induced efficiency is quite amazing. And you've seen tech solutions applied to other industries such as retail and healthcare, and it's coming to banks. And Plato had a lot to say about banking in the 21st century. I bet you didn't realize that, Brian. But what Plato said about banking in the 21st century is that necessity is the mother of invention. So banks have no choice but to become super efficient, and that will be Act 3 over the next several years.
Yeah, Mike, Brian was born in 1993, so he wasn't alive when Plato was just saying these amazing Instagram quote type things. But we, switching gears here, we did have, our staff has had a hearty debate on what Morgan Stanley CEO James Gorman said recently about returning to work. Basically, return to work, or you may not have a gig, or you may see your paycheck cut. What do you think about that stance by him and others on the stream? What is the outlook for banking jobs because of it?
Well, look, I mean, you have a culture which is born in person. And so it's the spontaneous conversation. It's the water cooler talk. It's your creativity. It's the informal, kind of conversations. That's what culture is made of. There's mentorship. And there's also, especially for new employees, but new customers. So customers, if Morgan Stanley's customers are seeing their clients face to face, I guarantee you that James Gorman is going to have their employees go see their customers too. And it reminds me of this iconic 1990s commercial, airline commercial, where the manager said, "We just got fired by a client," and he handed everybody in the room airline tickets to go see their clients face to face. And I think post-pandemic, you're going to see an explosion, not only in visiting clients, but in entertainment, face to face. And look, Wall Street is a hyper-competitive world. James Gorman and Morgan Stanley, they're hyper-competitive. They want to win. So it's not surprising that you see Morgan Stanley, especially Goldman Sachs and JP Morgan, all saying, "Hey, let's get back to the office so we can best serve the customers and nurture this culture that we have." Having said that, I mean, there's likely to be some hybrid solutions if you're not customer facing. And also there's a war for talent. So it's not 100% forward. I mean, all the banks are trying to hire, tech experts. And in a competitive world, you have to consider, a work-life balance a little bit more. But as of right now, it's back to office for many Wall Street workers.
And Mike, finally, I want to ask you, as we talk about the sort of hybrid e-banking and living life in real life, you were talking earlier about Bank of America and its technological positioning. We talked to a lot of sort of fintech startups on the show, whether they be banks or offering other services. How far away do you think we are from them chipping away in a more real fashion on the commanding market share that the big banks have?
Well, I think you need to divide the answer into parts. And you have had fintech players chip away at banks. To some degree, banks were mass affluent, mass market, and several fintech players went a level below that to the unbanked or the the smaller customers where banks weren't paying as much attention. And that was a missed opportunity from banks. In addition, you've had fintech players obviously gain share in the payment space. On the other hand, when it comes to the primary deposit or checking account, you're not seeing fintech chip away when it comes to the largest banks. And I think the most underappreciated aspect is what I said before: a multi-distribution, product, and geographic approach creates very sticky relationships for the banks. And that's what's underappreciated at the largest banks and the banking industry, as opposed to other areas of finance.
Yeah, I have personally been with the same bank for a long time, and I'm sure a lot of other people are like that for inertia's sake, if no other reason. Thanks so much, Mike. Appreciate your time. It's always a pleasure to talk to you. Next time, party at Mike's house with the disco ball. We'll all pull out our bell bottoms. Oh, he's pulling it up again.
And the white claw. And the white
Party next time.
Thanks, Mike Mayo, Wells Fargo, and our Brian Chung as well.
We are seeing shares of Moderna get a pop in the session, up more than 4% after the company announced it's expanding its production lines to make room for manufacturing its booster shots. The additions will help expand its overall production capacity by 50%. All of this comes even as COVID-19 case counts continue to decline nationally. It is down nearly 20% over the last few weeks. Let's bring in Dr. Rishi Desai, Osmosis Chief Medical Officer and former CDC officer. Doctor, it's great to talk to you today. The Moderna news, certainly an interesting one at a time when I think a lot of Americans are sort of trying to think ahead. Yes, things look good right now, but what are the potentials for additional booster shots come fall? What are the potentials for infection rates to go up because of the Delta variant? How are you looking at all of the variables right now?
So I know it might seem counterintuitive that you're seeing more vaccine production in the face of fewer cases. In the U.S., we're very fortunate right now, going through a good period. I think that the situation is that, as you pointed out, there are going to be variants that come along. Right now there's the Delta variant. Tomorrow there's going to be, another variant. And so we're going to have to keep kind of staying a step or two ahead of the coronavirus. And we know that the best way to do that is to immunize against these other variants. And the current vaccine doesn't do a great job against these other variants. I would say it does a good job, not a great job. And so that means that you have to continue coming out with booster doses, which will help you boost that vaccine effectiveness. So that's really the key there, is you get that booster dose out there. And keep in mind, the world needs more vaccine. Over half the world hasn't seen vaccine yet. So there's a huge demand to vaccinate the world. That's one issue. And two, to protect folks specifically against these variants. And that's why more vaccine is needed.
And Dr. Desai, when we look into some of the countries that maybe haven't vaccinated as high a percentage of their populations as we have here, or the UK has, they're probably watching the Delta variant and very concerned about what could happen if that starts to spread in their countries. I mean, even when you look at the EU right now, there are countries that lag the UK. Talk to me about maybe some of the concerns that you have there for those countries that are playing from behind here.
Yeah, look, this gets very personal for me. I have family in India, family members that have specifically died of COVID already. And it's very concerning because those folks, they didn't have access to vaccine because it wasn't available in their town or their community. Countries around the world that are behind, the America and the UKs of the world, they're basically trying to protect their population as best they can. And so I think their best shot at it, is to get vaccinations out there and available as quick as possible. And if and when that booster dose becomes available, to start, including that in the messaging right up front as well. So I think the faster we can get that vaccine out there, the better. Keep in mind also, when someone, let's say in another country, gets ill, yes, it sucks. Yes, it's terrible. And yes, it's scary. But that person also becomes a risk for creating a variant that can come back to the US, to the UK, and other countries and cause outbreaks. So there's a couple of reasons why you want to make sure vaccine goes abroad. A, because it's the right thing to do. But B, because that creates a risk for variants to come back and cause havoc here at home.
On what's playing out over in India, I mean, you pointed to your family there too. How much progress has been made in terms of vaccinations? We remember seeing those images a few months ago when they were at their peak with the COVID infections. But how much have vaccinations been distributed, and what are some of the hurdles as you see in terms of getting to what ultimately is the goal of herd immunity?
Yeah, I mean, take a country, a very populous country like India, where you've got a huge wealth inequities. Some populations maybe in wealthier parts of Bombay, things are probably a lot better in terms of vaccine protection. In most of India, that's just not the case. And so still a fraction of the population has been immunized, on the order of around 10% or so. And even with these huge numbers of vaccines being shipped to India, Nepal, Bangladesh, all these countries, it still doesn't meet the need, not even close. And so even though cases have come down and deaths have come down, which is fantastic, and a lot of that is because of public health measures, not because of vaccines that have kind of made their inroads there. So it's really public health measures, social distancing, putting mandates about who can be out and when. That has really made the difference for countries like that at this point.
Yeah, and it's a natural jumping off point to really ask about the upcoming Olympic Games, because you think about the context of what we're watching here and the lifting of some of those guidelines to have fans, granted limited capacity in a lot of these games, but fans now from Japan allowed to go, international fans not. But I mean, when you look at those risks in Japan around the games, how worried would you be about if really it was those measures that got us back to normal, maybe in combination with vaccines, but kind of the undoing of that? It seems like even people there in Japan are a little bit worried.
Yeah, I mean, the public health leadership in Japan has made it very clear they don't support that. They don't want 10,000 local supporters going to these events, which is what has been allowed. And if you look at the guidelines, they say things like the local supporters are not going to be allowed to cheer. They're not going to be allowed to kind of linger. They have to go home right away. Now, practically speaking, if you're in charge of that, how are you going to get 10,000 people to not cheer? How are you going to get 10,000 people to go home right away? It's just not going to happen. And so I think even with those kind of things on paper, practically speaking, that's a very hard thing to accomplish. And if we look back on the Olympics and say, oh my gosh, Japan was doing quite well, but now look at this surge that they're seeing. How are we going to feel about the fact that we had these kind of these policies go through? I think people are going to look back and say that this was a mistake. So I would say at this point in time, having 10,000 people in a crowd is probably not the wisest thing to do. And it's probably not the safest thing for the athletes either, to be honest with you.
Yeah, I think I agree with you. It's going to be hard to get 10,000 people to not cheer at all. Kind of goes against the spirit of the Olympics, but we'll be watching to see how successful it is. Dr. Rishi Desai is Osmosis Chief Medical Officer as well as former CDC officer. Thanks so much for joining us. Well, small business owners reported a record number of job openings last month. The National Federation of Independent Businesses reporting that about 48% of small business owners said they couldn't fill job openings last month. That was up from the number in April, and it was the fourth consecutive month of record high openings within small businesses. To talk more about that, let's bring in Mike Draper, RAYGUN owner, as well as Karter Lewis, Soul Slice CEO. And Mike and Karter, we should point out, we've got both of you on because you've said that you've actually had a lot of success trying to fill some of those jobs. Mike, you're in Des Moines, Karter over in Oakland. So Mike, let's start with you on what you have found about the marketplace as you look to fill about roughly a dozen openings. What have you found in terms of how much leverage employees are seeking and what you're able to offer to fill those jobs?
I think one thing we're able to offer is decently lit closets for doing Zoom calls in. No, that was a joke. We, I think, over the years have come up with a plan for employee retention that kind of takes a lot of things into account, not just pay, but kind of equity and how people are treated and what type of work environment it is. And it's not anything necessarily that we've had to update since the pandemic, but it's something that I think as people have looked out at, what they're going to do during the day and what kind of jobs they want to be in and what kind of work environment they'd like to be in, it's an approach to employee retention that probably makes sense for a lot of people now.
Yeah, and Karter, I mean, we keep hearing from politicians the idea that maybe unemployment benefits are making it harder to bring back employees or hire new ones to fill the vacancies. I mean, how much of that are you maybe seeing, or maybe it boosting maybe the negotiating power that some of these workers have? How has it all played out in the real world?
I think that's pretty much a talking point. In my opinion, I think we've seen the devastation the pandemic has had on the restaurant industry. And as a result, I think workers want better conditions, better opportunities. And so I don't think it's a matter of people wanting to stay home and stay on unemployment, but I think that the reckoning has come for the restaurant industry and people don't want to go back to the same. I think that's what it is mostly.
And Karter, you've talked about how you've thought about the hiring process over the pandemic. You used to run several restaurants before. This time around, you're looking not necessarily to pay hourly wages, but have a fixed salary for employees. You've talked about making sure that employees are sort of paid more equally. Can you talk a bit about that evolution and what kind of response you've gotten as you've looked to hire?
Well, really for me, for this venture, I just wanted to sort of take everything that I've learned over the last 35 years in restaurants. I've operated over like 8 restaurants, and really just put into play what folks have said, like, oh, we should do this, we should do that. The biggest piece is salary. I think a lot of operators leverage profit by not providing gainful employment to their employees. And so for this model, we decided, what if we put every single employee on salary? We felt like that would make them more engaged and feel more a part of it. And then, the biggest thing for restaurants is labor and retention. Those are the two things. And labor comes down to, can you offer someone a full-time job? I mean, I think people don't realize, the low-level restaurant workers, which we, would say like the dishwashers, runners, those type of people, they are making very little money. Most of them cannot afford to live in the country. And then you have the top tier managers, servers who are making a lot of money. Like, even the hierarchy is different. So we decided to take all that away. Everyone is paid the same rate at our company. It's only based upon your skill level, based on our assessment and what we want to do in our development of our employees. And so I felt like if we did that, that would be a good thing. And it worked. We put it into our pro forma, and it was amazing. We had stable labor, which gave us the opportunity, which we think gives us the opportunity to grow even more as a company.
Yeah, and Mike, I mean, I'm curious, it sounds like you haven't had maybe as hard a time bringing people back or hiring workers right now. When you see that, I mean, would you agree with Carter's point that it's mostly a talking point when we hear politicians saying people would rather stay on unemployment and maybe, just continue not working rather than coming back right now? Yeah,
that's not something that we've seen even when unemployment was at a higher rate per week. So again, it's always difficult for people to wrap their minds around any big complex issue, like employee treatment and work environment. It's a lot easier to say, oh, well, it's just this one issue. It's just pay or it's just unemployment, rather than everybody kind of holistically looking at, well, how is your scheduling handled? How is your sick pay handled? How is your actual flexibility? Things like that. We obviously have a lot of part-time staff who work in clothing stores. They might be in college or in high school or just want a part-time job. But it's still handy for them to have predictable scheduling, of a schedule that's mapped out for a month and you don't have to send people home when it's slow. They can be able to rely on when they're going to be working and how much money is coming in. It's kind of that stability. But at the same time, you have to take the time to cross-train employees and to have enough staffing so that if somebody needs to leave for a health or family emergency, somebody else can slide in. So it's not just rate of pay necessarily, because if somebody is making a little bit less, but there's enough staff to cover them if they have to leave, that's going to reduce, one of these stressful pressure points. So there's no quick fix to it if you're, a government or a business.
And Mike, you've got a pretty good pulse on what's happening out in the Midwest, given that you operate in a number of markets, whether it's in Des Moines or Omaha or Chicago. How are you looking to shift up your hiring process as you see the demand for workers only increase? And we talk so much about these record openings.
We oftentimes don't even post our job openings publicly. We only post them internally, and then people who work here will let people they know, friends or family, know that we have a job opening. So we look at that as one indicator that the work environment here is pretty healthy and that we're able to fill a lot of positions without having to, really beat the streets and bring in a lot of people. But it is, a lot of it does come down to employee retention. We don't have as much churn, so we don't have as many people to replace. So we don't need to do massive amounts of hiring because we don't have massive amounts of people leaving.
Mike Draper, the owner of RAYGUN over in Des Moines, and Karter Lewis, CEO of SoulSlice in Oakland. It's great to talk to both of you today. Really appreciate you joining us today.
Of course, on the flip side of this coin is the actual workers who are working to make these orders possible, to make Prime Day possible. As many of us look forward to the event, we're focusing in a bit more on the worker issues tied to Amazon and now Prime Day as orders pick up, given the fact that it has been a few weeks since that failed union vote in Bessemer, Alabama. A lot of things still not solved when it comes to the issues workers raised around Amazon's employment. And for more on that, I want to bring on Adam Obernauer, Retail Wholesale and Department Store Union Director of the Retail Organizing Project. And Adam, I mean, your guys' union have been at the forefront of kind of this union battle around the issues at Amazon. Talk to me about maybe how much has still gone unsolved, or maybe if any of the efforts and kind of added efforts on Amazon's side to kind of bring attention to these issues. Has anything changed?
Well, I'd actually say that things have gotten a little bit worse as you're leading into Prime Day. You have the constant working conditions that Amazon pushes through the surveillance and the monitoring of every worker's work product, how fast that they're working and the rate that they have, and then the mandatory overtime that you have during Prime Day, which forces workers to have 12-hour long days in hard working conditions, fast working conditions, high temperatures. There is a cost to getting a product this quickly, and there's a cost to all of it, and the workers are bearing the brunt of it for sure.
I mean, take me inside the fulfillment centers. To what extent does this two-day event really elevate the intensity and the working conditions you just pointed to? I wonder if you can elaborate a bit more.
Sure. Well, the working conditions are always extreme at Amazon. You have to pack a certain amount of boxes per hour. It's called your rate. And then you end up working against yourself. So if you average a certain rate over a period of time, you're held accountable to the rate that you average. So the person next to you could be working slower than you. You're both being pushed to go as fast as you possibly can. And so when you're already at your extreme and you're already at your limit, when you add an event like Prime Day and you add mandatory overtime to get ready for Prime Day, then you're just making these conditions worse. You're making it more difficult to work at a certain speed. You're pushing workers to the point where a lot of them don't go back to work. I mean, you look at the turnover rate at Amazon and it's extremely high. In the New York Times, they recently reported it's 150% turnover per year, which is more than double what you see in other industries that are comparable in the warehouse industry. So I would say that it seems just like a two-day event, but the lead up to the event, the blackout periods where workers are forced to work longer hours actually are pretty extreme.
Yeah, and Adam, we should know we reached out to Amazon to talk about kind of the allegations around working conditions or union busting claims in Staten Island, and we did not hear back yet in regards to those questions. But when we kind of think about the union vote and when it came amid kind of protection or maybe support here from President Biden. It's not often you hear a president in the White House talking about unions and supporting them against the second largest employer in the country. But when you think about how the union vote went and how much of a blow it might have been to kind of the rallying cry for workers at Amazon, I mean, how do you kind of recover from that in the mission to improve things?
That's a great question. I think that workers themselves feel like they're being surveilled all the time. Obviously, Amazon has the capability to do so. And I think that there were many, many workers that stood through and voted to become a union and to become unionized at Amazon, many more than have ever done so before in the United States. And so I think that taking on an organizing campaign is a very difficult process, and it's very scary. But when you're doing it at a place like Amazon, and the campaign that Amazon ran to vote against the union, being the severity that they put and how important it was to vote against the union so that they can keep productivity up, as if they're polar opposing things, I would say that the workers are still resilient and still are want to see things change. I mean, you can't work at Amazon on the day-to-day and not want to have a safer workplace, safer working conditions, and to feel safer overall at work. And so I understand the question. I think it's great, but I think that at the end of the day, I think you see Amazon workers that are rising up all around the country, not just in Bessemer, not just in Staten Island, and also all around the world.
And Adam, of course, we've got founder and CEO Jeff Bezos stepping down later next month. In his last shareholder letter, this came on the back of that vote over in Alabama. He seemed to suggest that the company was thinking about the treatment of employees, essentially saying we have to do better for our employees. That was back in April. And I wonder if you've had any conversations since then. Have you seen the company shift, at least in tone? Do you get any signs here that they're willing to move on some of these critical issues?
I think that a lot of it's very performative. And so what you saw during the union election was managers were appeasing workers. They were telling workers that they just need another chance. Let them fix it. They didn't realize things were so bad. And what you then see is you see this performative reaction from people like Jeff Bezos that say, well, we recognize working conditions aren't great. We'll do a safety study. But at the same time, crushing your workers' voice that are trying to voice their opinion that they want to have a union in Bessemer, they're polar opposing views, right? So it's easy to fight against your workers that are trying to take their own agency of the workplace and fight for better working conditions while they're doing it at a specific location, and then to make these broad, generic claims that you want to look into better working conditions at the same time. You were not really willing to listen to the workers that were organizing in the first place.
Yeah, it's a very interesting dynamic when we talk about Prime Day and the other side that doesn't get talked about maybe as often. But Adam Obernauer, appreciate you joining us to walk us through all the issues there. Retail Wholesale and Department Store Union Director of the Retail Organizing Project. Thanks again for the time.
Crypto prices continue to crater on Wall Street despite the broader rally we're seeing in the equity markets today. Bitcoin is down another 7% right now and is down about half from its peak that we saw back in April. Remember when Bitcoin was above $65,000? We also have other smaller digital currencies following suit. This is as China expands its crackdown on Bitcoin mining. Joining us now is John Wu. He is president of Ava Labs. Good to see you, John. Thanks for being with us. I want to start with the latest out of China because authorities in the Southwest province ordered Bitcoin mining projects to shut down. What are the larger implications there for cryptocurrencies? And do you think that investors in the space are overreacting a little bit?
Hi, nice to be here. So first of all, China cracking down on Bitcoin cryptocurrencies is actually nothing new. Basically, a decentralized computing source as well as distributed governance is almost antithetical. It is antithetical to what the Chinese Communist Party believes. What they want is more control. And simply put, when you have a decentralized currency like Bitcoin, it reduces their effectiveness in terms of capital controls. And China is one, as we all know, has hugely strict capital controls. So them coming down and attacking the Bitcoin miners is really not a surprise. They did it in 2013 against the banks. They did it in 2017 against exchanges. And they started the mining narrative, actually cracking down on miners in 2019. This is just the latest in their effort.
So, John, is this dip that we're seeing right now, is this a buying opportunity for Bitcoin as you're seeing it? Or do you think that it could actually go even lower than it is right now, perhaps in the 20,000 range?
So obviously the short-term impacts due to the noise related to the government announcements will not help. But this sell-off recently this is just another example of the recent worries in the macro environment. First, it was we're printing too much money in the US. The rest of the world is printing too much money. Then you had US potential regulation against not just Bitcoin, but against various things out there. And the fear of that, capital gains taxing, fear of more taxing in general, led people to take profits. So that started with the 30 times sales SaaS companies. Then we saw, you guys just had a moment about Lordstown Motors. That was a SPAC. So a lot of the high risk related industries all sold off. Crypto and Bitcoin is part of that last 2.5-3 month movement of higher risk, more speculative asset classes selling off. As it relates to today's news, again, with China, they are far more focused on their own central bank digital currency, the digital yuan. That they love the best aspects, which is transparency, but they want to take the control of the network. So that's why decentralized and a distributed governance scenario with Bitcoin is their enemy. However, they are deploying the digital yuan and using the best parts of blockchain technology in order to get more control. We should be very worried about this in the US in general. And the fact that they're going to crack down on the miners, in my opinion, is a good thing, because there are great new companies in Texas who are going to take up the slack here. There is great solar as well as wind power that is very cheap and renewable. And if we can have more hash rate in the US, these are professional managers who've done data centers for a long time and can contribute to the grid in Texas or in upstate New York for hydro.
John, I want to get your thoughts on something happening with crypto that's pretty technical, and it's called the death cross. And I know that sounds really ominous, but it means the average price over the last 50 days for Bitcoin fell below that of its 200-day moving average. And that indicator is typically seen, as a closely watched technical measure for where that cryptocurrency is going to be going in the future. Most see that as a bearish signal. Do you think that that's the case this time?
Right. So the technical analysis people have used the same death cross, regardless of what asset class. They've used that as a chart as an indicator. Well, in this case, this time, if you look at the sell-off now versus a couple of weeks ago, there was high volume a lot of weeks ago. There was a lot of leverage in the system. Right now, it just seems like there's a lack of buyers because the volume is not as big. The curve for the futures is not really in huge contango. Another indication the forward outlook is not as great as it was in the past. So I do feel that there is some worry in the short term. However, I don't think anyone should worry about the future of the blockchain technology and where prices will be in the medium to long term. Reality is there's more and more utility, and the utility is coming and looking at things like Ethereum, like other first layer protocols like Avalanche. So there are plenty of DeFi, NFTs, as well as other use cases now sprouting up. So some of the Bitcoin lack of enthusiasm, if you will, is partially the regulation in China, but also because there may be other things that they need to look at because utility is just down the corner.
So I want to ask you about some of the other cryptocurrencies. I know we've been focusing a lot on Bitcoin in this conversation, but we were looking at the cryptocurrency chart not too long ago. We're seeing some of the other cryptocurrencies taking a leg lower. There it is, Litecoin, Ethereum, Dogecoin, all in the red right now. How should really investors be considering some of these other digital currencies? As we go forward, it does seem as if what happens with Bitcoin does have these knock-on effects with some of these other cryptocurrencies, even if they're not being targeted specifically.
That's right, Kristen, you're right. There is high correlation in the space still, just like other asset classes. When one big growth SaaS stock sells off, the others usually will follow along with it in some level. But if you look at the underlying metrics like unique visitors or addresses being created on the DeFi protocols like Ethereum, Avalanche, and some of the others, you'll see that users and interest is actually picking up even though prices are down. So prices coming down is actually in a weird way beneficial to people who want to operate and grow the functionality in the space. That's what we're doing here at Ava Labs for helping the Avalanche protocol, and I know others are doing the same. And I'm telling you, the traditional finance world is taking note of this, and they will be looking at more applications that they can have for use cases as well in the near term. So yes, short term, a little worrisome. Medium term, long term, there's $70 trillion of millennial capital that will be coming towards this space in the next, call it 5 to 10 years.
Yeah, great insights. John Wu, president at Ava Labs, thanks so much for being with us today. The pandemic continues to be a wake-up call for Americans to buy life insurance policies. In just the first quarter of this year, sales of life insurance policies jumped 11%. That's the biggest gain in nearly 40 years. And people of all ages and income levels are buying these policies. I recently spoke with MassMutual CEO Roger Crandall about that trend and what it's meant for his business.
The interest in life insurance is up. I mean, COVID certainly got people thinking about the need for life insurance and protecting their families. So MassMutual, I'm really happy to say we're seeing sales even stronger than that. We were up well over 20% in the first quarter. So again, life insurance is not something that most people think about, but we know that there's about 100 million Americans who either don't have life insurance or who have it and tell us in surveys they know they need more. You know, everyone wants to protect their families. And for MassMutual, as the name implies, we're a mutual company. We're effectively owned by our policy owners. So way back in 1851 here in Springfield, 31 people put some money together, started selling policies to friends and neighbors. And now we have 5 million friends and neighbors and $29 billion of capital above and beyond the reserves for those policies. So MassMutual's been growing. And it's been one of the it's horrible to look for positive things in a pandemic, but people recognizing how life insurance can help their families has certainly been a good one.
And you look at the numbers, nearly a third of consumers say that COVID-19 has made it more likely that they'll purchase life insurance in the next 12 months. Talk to me about the kinds of people who are doing this, because you think life insurance, you think sometimes, well, older folks, wealthier folks are buying into these policies, but you're seeing that even millennials, I think something like 45% of millennials say they either have it or want to buy life insurance in the not too distant future.
Yeah, we're actually seeing one of the strongest growth segments is millennials. And again, we think that's really positive. You know, one of the things we've been doing is investing heavily in technology to make it easier to buy life insurance, particularly going through the underwriting process. You know, with fully underwritten insurance, you're able to give people the lowest possible cost of insurance. But, you know, the days of having a paramed show up at your house, in some cases with a scale to start the process, and it goes downhill from there from a consumer perspective. Although you might have to do that for some large policies and people who've had historical health issues, increasingly we're able to use machine underwriting to get people through an underwriting process very quickly, issue policies very quickly, and that just makes the whole buying process better, both for consumers and for agents who frequently are working with customers to help them understand what their insurance needs are.
You know, you bring up a good point, because I was curious how you would assess someone's health risks, especially during a once-in-a-lifetime pandemic. Are you asking to see COVID-19 tests? Are you asking folks if they've had COVID? And what are you doing with regards to that?
Yeah. So remember, our business has always been one around trust, where our policy owners and the owners of the company share sensitive health information with us, and we use it just for the purpose it was given to us, which is to put them in the best risk class, to give them the lowest kind of price of insurance. So we do ask a series of health questions. And what's great now is, again, particularly for younger, healthier folks, we don't have to do that we don't do that on paper. We can do it just on an app. We can have the underwriting be happening literally as that app is getting taken, and we can then issue a policy immediately. So we built a fully digital platform. We haven't just digitized an analog process. We've built a brand new, effectively digital insurance company, and that's been an important thing. And the uptake on that accelerated dramatically during the pandemic in 2020. Change management's always one of the big challenges for any industry, especially one that has established ways of doing business. The pandemic actually got people to accept change.
Well, that's a good thing, certainly. I want to ask you about another trend we're seeing, because as the number of policies sold climbed, we saw the average death benefit actually shrink by about 4% to $270,000. What's your takeaway from that? What does that tell you?
I think it's great. I think it's the realization that everybody has, that they need some life insurance. Life insurance is not just for the wealthy. In fact, the history of life insurance in the United States is really one of all of America buying life insurance. You know, our oldest policyholder today is 103 years old. She's had her policy 93 years. So it's a very long-term product, permanent life insurance. So I think it's absolutely fabulous that we're seeing millennials buy policies, that we're seeing policy sizes trend down. That just means more Americans are making sure their loved ones will be protected if something happens to them. And that's just awesome.
We also had a chance to talk about the return to the office. Roger Crandall starting now to ask employees to come back to work on a voluntary basis there at MassMutual. And he also told me they're pushing ahead with a $300 million investment to expand their footprint in both Boston and New York City. You can check out the entire interview on our website.
Bring in Dr. Brian Garibaldi. He is Johns Hopkins Biocontainment Unit Medical Director. It's good to have you here, Doctor. And when we have this discussion about vaccinations and the variants, especially the Delta variant, I think a lot of us, the concern we have is for kids, 12 and younger. Do we know how the Delta variant affects them? Because they can't get vaccinated yet.
Well, that's a great question. I mean, we know that this variant definitely spreads more easily and likely causes more severe disease than the other variants that are available or that are currently circulating. And what we have seen is, we've seen an increase in cases among unvaccinated people, which includes children. So over the last several months, we've seen an uptick in the number of children who have been infected and the number of children who have required hospitalization and in some cases developed severe disease. So I think that's something that we're worried about, and it's another reason that we really need to step up our game in terms of getting people vaccinated. We're probably not going to make President Biden's goal of getting 70% of the country vaccinated by July 4th, but that doesn't mean we still can't continue to make progress until the school year to try to make sure that we decrease community transmission as much as possible.
And Doctor, from your perspective, what do you think will kind of help move, I don't mean to make a pun here, but help move the needle as it relates to getting more folks vaccinated? What do you think are the biggest challenges out there?
Well, I think one of the biggest challenges is the misinformation that's circulating about the potential side effects of the vaccine and the lack of a clear message about its benefit, both for individuals but also for communities. And I think we're starting to see some progress on that front in terms of meeting people where they are, trying to understand what their concerns are, and really trying to battle that misinformation with valued members of local communities. But I still think we have a ways to go, and we've seen some progress with incentives like vaccine lotteries, for example, where people have been getting financial incentives to get the vaccine. Those have led to some uptick in vaccination rates in the areas that have implemented them, but we've seen that initial benefit from those incentives start to tick back down. So we're going to have to come up with continued creative ways of getting people to recognize that this is for their own health, but also for the health of their friends and family and their communities.
Doctor, we've all encountered that person who just won't listen to reason. So what can those of us who are vaccinated adults, who return to the office, who might encounter people who are not vaccinated, who might be able to transmit a variant of COVID-19, what can we do? What should we do to protect kids? Do we need to worry if we're vaccinated and encountering people who are not, who might be contagious?
So we know that the vaccines are very effective at preventing symptomatic illness, and that probably means that the vaccines, that those of us who are vaccinated are probably less likely to be able to transmit COVID-19. And luckily, so far, the data we've seen in terms of the mRNA vaccines and the Delta variant are holding that high level of protection in the real world. And so, I expect that even if you're exposed to someone who has symptomatic COVID-19 and they're not vaccinated, if you've been vaccinated, your chance of becoming symptomatic is quite low, and then your chance of transmitting it onto someone else is also low.
And I imagine you're probably having a lot of these conversations, in your own area of work. And what do you say to someone who might be hesitant about getting a vaccine? How do you kind of help them get over that and get the shot in the arm?
Well, I think the first thing is trying to understand what their hesitancy is, right? People have very real concerns, legitimate concerns about safety based on their own medical conditions, based on the people that they're around, and there, we also have to recognize that there are many people who are hesitant to get vaccinated because of historical reasons, and the inequities in our healthcare system, particularly amongst underrepresented minorities. So I think the first step is to just try to engage people in an honest conversation about, hey, I'm curious, why have you not yet gotten vaccinated? And I think the conversation starts there, and where it branches off really depends on what their response is and what their concerns are.
We appreciate your comments. Dr. Brian Garibaldi is Johns Hopkins Biocontainment Unit Medical Director.